Thank you for keeping it tuned to Smooth 98.1, your love music, love life station on a Monday morning. Yes, a money-making Monday morning. And it's that time to get into the world of business. My name is Ayokunmi Kekiriako, and we'll be having a conversation about fixed income and money market securities in Nigeria and how you can get involved and get investing. It's going to be an interesting one. So you can join us this morning. Any questions, anything you'd like to get across to us on this particular topic, please do so. We love to hear from you. The WhatsApp number is 0809 444 0981. 0809 444 That is the WhatsApp number. Joining me this morning to talk about this and, of course, educate us, give us that well and needed knowledge on this particular matter is AYOMIDE ODEFEMI. He's a fund analyst at AFRINVEST Asset Management. Very good morning to you, AYOMIDE. Great to have you on the show.
Morning, Ayo. Great to have you here. Morning, everyone.
It's definitely going to be a great week because there are two IOs on the call this morning, so it's double the joy, definitely as we get as we get along. Okay, so let's talk about this. You know, when it comes to investment, you talk about portfolios and so on and so forth, and there are different facets to an individual's portfolio. How important are fixed or how important is the fixed income to a portfolio for an investor in Nigeria?
Okay, thank you. So, fixed income securities, we talk about bonds, we talk about treasury bills, and what they do is that they offer these unique combination of, stability, predictability, and also, provide returns and, making them an attractive option to investors that are trying to mitigate their risk and also trying to, get a potential return. They provide a steady income generation and also, reduce this reliance on the volatile equity market, enabling the investors to plan ahead. And, one or two of the importance is one, diversification, investing in fixed income instrument help you diversify, help you reduce your risk and, help you also lower, chances of you losing your money. And, also gives you stability. It gives stability to your portfolio. Then for investors that are trying to, seek capital preservation, if your motive is to or your priority is to protect your money, fixed income instrument are also a smart way, to do this. And lastly, for investors trying to also seek a regular income generation, it's another way. It's very, very important for them. You can always receive your income monthly, quarterly, semi-annually, or even annually. And then, with this predictability, you can always plan ahead, ahead of time. Maybe you want to use it to sort your expenses, or you also want to maybe reinvest for growth. So yes, it's very, very important, in the portfolio.
Okay, thank you for laying the groundwork and letting us understand how key that particular area is in an investor's portfolio. Now, let's talk some numbers here. Nigeria's 54.9 trillion 2025 budget has a 14 trillion naira deficit, which has to be plugged with borrowing. Now, depending on how much domestic borrowing is planned, does that bode well for fixed income investors?
It's an unprecedented budget. I mean, 54.9, I think that's the highest that we've actually seen in history. And then, like you rightly mentioned, when they did the breakdown, the budget deficit is estimated, to be around 13.9 trillion. That's about 4% of our GDP. And then, the new borrowing from this 13.9 trillion, it's 9.2 trillion, and about 7.3 trillion is expected to come from domestic borrowing. And then, although I don't want to, delve into that, but then this budget deficit is even an estimate, there are higher tendencies that we might even, need more figures to this. When you look at the revenue assumption, how overly ambitious it, and, the assumptions too about price of oil and, our crude oil production too. Then
Okay.
to how it actually, bodes well to the fixed income investors. Well, while too early to call, but then, this increased borrowing may lead to a bearish fixed income market. I mean, due to excess supply in the market, we'll most likely see governments coming out, to borrow more aggressively. And, while trying to do that, they might want to, make this yield more attractive to investors so as to, borrow more from them. However, looking at the positive side of it too, it's also a good one for new entrants in the market, the new investors, they can
Correct.
easily get this, yeah, high yield, and well, for me, I think at the end of the day, inflation dynamics and also, the market liquidity will actually, determine the net impact. But then it's a bearish one for the market if governments will actually, come into the market to borrow aggressively.
Okay. Now let's look on the flip side here and talk about money market securities.
Okay.
How well do they complement fixed income securities? I mean, do they hold each other hand in hand easily, or what goes on between the both of them?
All right, so I would say they are like twins, brothers and sisters, treasury
Ah,
bills, commercial papers, the the fixed deposits, and then while fixed income provides the stability, they also provide the stability. Although it might be in short term, and then they also bring this liquidity into the market. It's something that you can easily dispose and you can easily try to like raise money from with those instruments. And while the fixed income is actually a long-term one, the treasury bills and the money market as a whole, it's a short-term investment. And then, like I said, it
okay.
helps investors, diversify. You can easily diversify while trying to hold some long instruments. You can also hold the short instrument in case you need liquidity. And then also, when you look at it from the inflation and the, real return perspective, to some large extent, it has actually, helped edge against inflation to a large extent. While as at now, no government-backed instrument, can actually help you edge against inflation. I mean, give you real return, positive real return. December, January, we've seen money market instrument, crossing the 30, 31, effective yield and then, they are like the closest, when it comes to helping you edge against inflation. So yes, they create a balanced portfolio, to the fixed income and then to the portfolio as large. And then they also help the investors, optimize their return.
Hmm. All right. So the fixed income securities are for those who want to play the long game. And if you want to just get in and
Yeah.
out, you talk about the money market securities. It's great to have the short and the long end of the stick at the same time. Okay, let's talk about the federal government of Nigeria. They issued retail savings bond during the first week of every month with a minimum entry of 5,000 naira. Is this a good addition to add to one's portfolio, or can individuals just say, I don't really know if I want to do this or not? But what do you think about investors getting in on this?
So for me, it's a very good addition. It's a very good addition. And looking at it from this perspective, I mean, not everybody can, afford the minimum subscription for the fixed income and then the money market instruments. So for T-bills, for instance, and treasury bills, the minimum subscription is 50 million, and not everyone can,
Wait, 15 or 50?
50 million.
50.
Yeah, 50 million. Yeah. So not everyone can, afford this. And then, with this federal government savings bond, where, the subscription level is as little as 5,000, and, it also offers around 16 to 17%, in terms of return. I mean, the last one that was opened in March that closed last week the 2-year closed at 16.63, while the 3-year closed at 17.63 as well. So, and then additionally, they pay coupon every quarter. So that means you get your coupon, 4 times a year. And you can even structure this thing in such a way that, you can invest 3 times a year and get your payments monthly. So for instance, let's say you invest in January, in February, in March, you can be rest assured that you get at least a monthly income, every year, every month, sorry, till the investment matures. So for me, it's a very good investment. I mean, for people that can't afford the 50 million subscription level for both the T-bills and the bonds.
Okay. That 50 million just has my head spinning, just thinking, how many people actually can afford to jump on that one? Man,
Exactly.
those are some serious numbers. Okay, now last week there was a primary market treasury bill auction where the central bank of Nigeria they offered T-bills worth 550 billion naira across the 91, 182, and 364-day tenors. How would you describe the demand?
So as you rightly mentioned, last week Wednesday, the CBN came and they offered T-bills across the 91, 182, and 364 days. I mean, they offered 550 billion, in terms of worth of instruments. And then when you look at the demand, I mean, using the bid to offer ratio, that's the subscription level over, the bid ratio. So the subscription level over the offer ratio, it closed at 2.3x, I mean, amounting to 1.2 trillion. I mean, very good demand. However, when you compare it with, with the previous auction, the subscription level actually came in lower because the subscription level, in the previous auction was around 1.9 trillion. I mean, the bid to offer ratio closed at about 3.0x. And, these reasons are not far-fetched. So, for instance, the last T-bills auction before this one that held last week Wednesday, there was about 1.3 trillion maturity in sight, which helps, boost liquidity in the market. However, as at last week Wednesday, the only maturity in sight was about 162 billions, in bills maturity. And then, these liquidity even weighed on stop rates. For instance, the 91-day, closed flat at 17%, while the 182 and the 364-day, bills, yield closed, stop rate closed higher 4 basis points and 57 basis points to 17.79 and 18.32, respectively. So while the demand, is still very strong, compared to the previous auction, the demand actually, weakened, and this was just due to, the negative liquidity in the market.
Interesting stuff. Okay. I mean, with all that being said, everything that we've looked at, front, back, left, and right this morning, do you forecast a healthy demand for bonds and T-bills in 2025?
Okay, so this is, quite tricky, but then I feel that, a healthy demand for bonds and T-bills in 2025 will likely demand on, three factors: inflation dynamics, the interest rate environment, as well as, the government borrowings that, we mentioned earlier. So T-bills, bonds, that has been issued since the start of, I think, February, we've seen, a huge subscription level. And, with inflation at 24.48%, after the rebasing exercise, if we continue to see this depreciation, in inflation, deceleration in inflation, it might actually force the Governor Cardoso-led NPC, committee to cut interest rates. I mean, and this will most likely push yield lower. However, this government's aggressive borrowing, plans to borrow about 7.3 trillion, I mean, estimated for now, might still, want to push yield higher because they will most likely, want to offer incentives, to investors to part away with their money. So, like I said, it will most likely, depend on, these three factors I just laid down. So if government, because I remember last week, Wale Edun was quoted, saying that this time around they are planning to reduce their borrowings and, they want to now focus more on seeking other investment, maybe through FPIs, but this time around maybe want to reduce their borrowings to finance the budget. If they are able to like achieve this, then maybe we might see less aggressive borrowing in the market, and then this will actually help boost demand in the market, and then we might see a healthy demand for both the bonds and then the T-bills instruments in 2025. Yeah.
All right, good stuff. Good stuff. Thank you so much for the insight. I've been talking to AYOMIDE ODEFEMI. He's a fund analyst at AFRINVEST Asset Management. Thank you for joining me on Business Express this morning.
Thank you so much, Ayo. Glad to be here.
All right, fantastic. Have a great Monday and a great start to your week. And thank you so much for being a part of the show this morning. This has been Business Express on the Smooth Breakfast on Smooth 98.1. Don't go anywhere. Do not touch that dial. It's great music coming your way as we journey along to 7:30, where we take a deep dive into the stories in the national dailies on Freshly Pressed. Boom.
Yeah.
Nice one.